1. Pound versus Euro, latest job market data impact. 2. Pound sterling to US dollar reversal alert, is the pullback a buying opportunity? Forex analysis. 1. Pound versus Euro, latest job market data impact. The British pound has recently gained strength against the euro, following the release of new job market data that suggests the cooling trend in the UK labour market is not as severe as previously feared. This shift in perception has provided a boost to the pound, which was last recorded at 86.52 pence against the euro, reflecting a decrease of 0.22% for the euro. The latest figures have alleviated some of the pressure on the Bank of England, reducing the urgency for more aggressive interest rate cuts, which in turn supports the value of sterling. The labour market statistics present a somewhat mixed scenario. For the 3 months leading up to May, annual wage growth was reported at 5%, marking the lowest rate since the second quarter of 2022. However, this figure still slightly exceeds the median forecast of 4.9% predicted by economists surveyed by Reuters. Additionally, a previous report indicating a significant drop of 109,000 employees on company payrolls in May has been revised to show a much smaller decline of just 25,000. Sanjay Raja, the chief UK economist at Deutsche Bank, commented on the labour market report, stating, "Today's labour market report continues to paint a picture of a loosening jobs market. That said, the labour market picture looks better than it did last month. This indicates a slight improvement in employment conditions, despite ongoing concerns." The recent job figures, combined with unexpectedly high inflation data released on Wednesday, place the Bank of England in a challenging position. They must navigate the complexities of persistent inflation while also addressing a labour market that is showing signs of slowing down, if not outright contraction. James Smith, an economist at ING, noted that this situation takes some of the pressure off the Bank of England to cut rates more quickly for the remainder of the year. In addition to the euro, the pound has also strengthened against other currencies, including the Japanese yen and the Swiss franc. However, against the US dollar, the pound experienced a slight decline of 0.15%, trading at $1.1340, as the US dollar regained strength following a sell-off earlier in the week. This sell-off was triggered by media reports suggesting that US President Donald Trump was likely to dismiss Federal Reserve Chair Jerome Powell. Although Trump later clarified that he did not intend to fire Powell, he left the possibility open and reiterated his criticism of the Fed for not lowering interest rates. As we analyze these developments, it raises important questions about the future of monetary policy in both the UK and the US. How will the Bank of England respond to these mixed signals in the labour market? And what implications will Trump's comments have on the Federal Reserve's decisions moving forward? We invite you to share your thoughts and opinions in the comments below. 2. Pound sterling to US dollar reversal alert, is the pullback a buying opportunity? Forex analysis. Is the pound sterling to US dollar pullback merely technical fluctuation or a sign of a significant bullish reversal? The pound sterling to US dollar currency pair has shown signs of recovery after briefly falling below a long-standing upward trend line, a topic I previously explored in my article from July 15. This movement was somewhat anticipated, especially since the pair had entered oversold territory on the daily chart, and I had hinted at the likelihood of a pullback. This situation raises an important question: what has shifted in the landscape for the British pound? The pullback that occurred after the peak values recorded on July 1 was primarily influenced by recent developments within the UK. Concerns regarding fiscal policies have resurfaced, coupled with a more dovish stance from the Bank of England. Recent data from the UK has bolstered the argument against aggressive rate cuts, as inflation figures have exceeded expectations and labour market statistics remain robust. However, this positive data has not significantly changed the market's anticipation of rate cuts ahead of the upcoming Bank of England meeting scheduled for August 7. Currently, market participants are still forecasting nearly a full 25 basis point rate cut, with expectations of a total easing of close to 50 basis points by December, according to data from LSEG. Implied Bank of England rate cuts through December 2025. Source: LSEG. Technical analysis of GBP/USD. The pound sterling to US dollar has recently tested a descending trend line on the 4-hour chart but has yet to break above it. A successful breach of this trend line could trigger a more substantial upward rally, with potential resistance levels around 1.3585, which coincides with the 100-day moving average. However, it's important to note that such a movement would not necessarily negate the bearish long-term outlook discussed in my July 15 article. GBP/USD 4-hour chart, July 18, 2025. Source: TradingView.com. The daily chart also illustrates the retest of the trendline, with immediate resistance observed at the 1.3500 mark. A deeper retracement towards 1.3657 remains a possibility based on the daily timeframe, with only a daily candle closing above this level invalidating the long-term bearish scenario outlined in the article titled Pound Sterling to US Dollar Vulnerable as Trendline Break Sets Up Potential 600 Pip Drop, published on July 15. A pullback to this level could present market participants with a more favorable risk-to-reward opportunity. GBP/USD Daily Chart, July 18, 2025. Source: TradingView.com. Support levels asterisk 1.3438, 1.3380, 1.3250. Resistance levels asterisk 1.3500, 1.3657, 1.3788. What do you think? Is the current pullback a mere technical adjustment, or does it signal a more profound shift in the pound sterling to US dollar dynamics? Share your thoughts in the comments below, asterisk asterisk.